everyone. Welcome to yet another weekly analysis. So, first and foremost, you know, we've said this before on here that whenever, a new week has started or a new month has started, it is very important for you to check the previous candle. It's very important. It's very important for you to check the previous candle so you see what has happened in the month, right? So for Euro USD now, we are still focusing on Euro USD. You might be thinking, why are we just analyzing Euro USD and whatnot? But we are still focusing on Euro USD. This is the pair that will give us great returns by the end of the year. It is very important for us to focus and ride a particular trend. In that way, we're able to catch every move. But by the time we start, dabbling around, looking for, any move to catch just any move, we'll miss certain moves. I've done it. I've been there, and I'm talking from experience, right? So it is better. It is slow pace as well. It is very slow pace to trade, a particular pair. In a month, you might trade 3 to 4 times in a month as a swing trader. I traded 3 times last month. In October I traded Euro USD 2 times actually, and I missed a trade on Euro USD, and I'm going to show you what I missed. So on Euro USD, this is what we are seeing. We're looking at a top down analysis. Now on Euro USD, we are seeing a bearish engulfing candle off of the monthly time frame. You see what I'm saying to you? Now, it's not just hanging. You need to understand that this is not just hanging. It's not just there for no reason, right? There is something that's pushing the market. There's something that's pushing the market. There's a price we are hitting that's making the market go down, right? There's a price we're hitting that's making the market go down. So for real USD, for the monthly time frame, we are what bearish. Structural wise, we are bearish, and we've gotten a bearish engulfing. Not just any bearish engulfing, but this is more like an evening star, candlestick pattern. This is an evening star, right? So on the weekly time frame, now this is the top analysis from the higher time frame to the lower time frame, right? In the weekly time frame, we have given ourselves a full reversal. Now we were selling Euro USD, last month, anticipating a reversal. We were using the DXY to give us extra confluence. That's what I'm saying to you right now. We're using the DXY to give us what extra confluence, and we are still using the DXY. But right now, the Euro USD is south. It's facing south. If you are looking to buy, I don't know. I see no reason why you should be buying, even for a scalp or for whatever. Euro USD is short. Dollar is gaining momentum. It's strong right now. So Euro USD, we should look for sales. Why am I looking for sales on Euro USD? What are the things I see that you may not be seeing? What are the things that why am I saying sales? Now, if you look to the left, this is how I plot my key levels. I look to the left. I don't plot my key levels above the last high. Higher high, no. Higher high, higher low, then come and retest the last high. No, I don't plot my key levels there. I plot my key levels from the left. It's called mirroring, right? You mirror the charts. You use the left to predict the right. You see what I'm saying to you? So that's what I do. Now, on Euro USD, we can see that we have a perfect double top here on the weekly time frame, right? About 1,900, 1.19000. You can see we have a perfect double top right there, right? And then if you look to the right right here, you will notice that this is the exact same place that the double top momentum is coming off of. The reversal is coming off of this same turning point right here. You see what I'm saying? So on Euro USD on the weekly time frame, we are now bearish. Before we were not bearish. This is very important for you to understand. The Euro USD was not bearish as of last month. No, it was not. We were actually anticipating it on the weekly time frame. It was bearish on the daily time frame, it was bearish on the monthly time frame, but we were anticipating it on the weekly time frame with the DXY as confluence, like I've said before, right? So Euro USD is very much bearish. Now it's bearish. The weekly time frame is bearish, the monthly time frame is bearish, and the daily time frame is bearish. There is no better time to trade Euro USD than this month or this time right now. It is basically an A plus setup. It is bearish on the monthly time frame, it is bearish on the weekly time frame, and it is bearish on the daily time frame. And we are selling in the direction of the overall time frame on the market. That's the monthly time frame. Very, very important to know this. It makes things go smooth for you. You are trading with the trend. I'm excited to see how far we could take Euro USD. I'm very excited to see, right? But moving forward for Euro USD for next week, we're expecting a retest of the neckline of the. This is what I mean. Now, a double top is a double top is not a double top until we've broken the neckline. This right here is not a double top. This right here is not a double top. This is a confirmed double top. This is a what confirmed reversal. The moment we break the neckline, that is when it is a certified double top or a certified reversal pattern. So also the moment we break the neckline of a head and shoulder, this is not a head and shoulder, right? This right here is not a head and shoulder. This is not a head and shoulder. This is a head and shoulder. The moment we what break the necklines, that is when they are certified. So we were waiting and anticipating for Euro USD to actually break the neckline of the weekly time frame to give us a reversal, and that we have done. That has happened. Now we have to capitalize on the next move, right? On Euro USD, we are expecting a retest of 1.16000. It's a perfect round psychological number, perfect price, right? What do I mean by perfect price? If you look to the left right here, we were underneath it, we sold. We are above it, we bought. We're underneath it, we sold. We are above it, we bought. You see what I'm saying? We're above it, we bought. But now we are underneath it again. We're expecting what to sell. So on Euro USD, we're looking to what sell off of 1.16000. There is nothing else you should be looking at. If you're not looking at 1.16000, I don't know what you're looking at. Euro USD, that's the money move right there. And I'll show you even on the DXY, you see it has equal space from where price is at right now to where we're expecting to buy off or trade off of, right? So on the DXY, right, on the DXY, now this is what I'm going to show you, right? I'm going to show you what I mean by a reversal, because it is not just enough to say, reversal is happening. You need proof. You need extra confluences to say, all right, the reversal is what actually happening. Now, this is what I'm going to show you, right? On the DXY, we have a trend line like so, holding the market structure, right? We have a trend line like so in the DXY, like so, swing low, swing high, like so, right? Now, this is perfect. Now, this is the third touch of the trend line rather. Now there is a trick, right? Not a trick, but there's a rule, right? The third touch of the trend line does the trick, meaning that is when the market is about to move with full momentum. Now, how do we know it's about to move with full momentum? What are we seeing? How do I know? How do I anticipate to be able to execute? Like I said in the last video, before the markets move, before the market reverses, it will first of all tell you, it will let you know I'm about to move, jump in. If you notice, double bottom right here, we had a push to the upside. And if you notice, we're about forming another double bottom right here on the monthly time frame, and then the push to the upside. It's not a complete double bottom because we haven't broken the neckline. We haven't closed above the neckline. Let me zoom in for you. It is not a complete double bottom until we break the neckline. As you can see, we have not broken the neckline yet, but that we will do next month by the grace of God, right? So on the DXY, we can see that we are anticipating a reversal. On the DXY is basically the dollar, the euro USD upside down, right? So the dollar index is expected to keep rallying up to the upside. On the weekly time frame, we have had a full blown reversal on the weekly time frame, a full blown reversal, break of neckline right here, and then a double bottom right on the counter trend on the trend line. It is perfect. So now I understand, I am not scared, trying to reduce my risk. I'm going to use my best risk possible, which is 1%, right, to execute this trade. Because why? It is an A plus setup. It is a short trade. It is not now listen, no trades are actually sure, because there are no trades that are 100%. But with my setup that gives me, winning trades, this is what it looks like, right? So on the DXY, we're expecting a retest into this level. Now, I will not be executing the Euro USD until the DXY touches this level. Now, it is not as if the Euro USD does not have a mind of its own. It is not as if the Euro USD would not move regardless. The fact is this: the DXY is the dollar, right? The DXY is dollar. If you want to, check for Canadian dollar is CXY. JPY is Japanese yen is JXY, right? So the DXY is the United States dollar. You see what I'm saying to you? So if you're trying to trade the United States dollar, this is where you should be at the DXY, right? So if the DXY, if the United States dollar that is paired with euro has said it is not ready to move yet, do you think Euro USD will move? No, it will not. No, it will not. It will stand still until the DXY is ready to move. I have back tested it and it works. Now, it helps you to avoid early entries, premature entries. Because trust me, there are some times where you would execute your USD, but the market, the DXY is not ready to move yet, and then it goes a lot lower and takes everybody out, liquidates you. So you have to wait for the DXY. I'm preaching it. You have to what? Wait for the DXY to get into this level right here, 9.000. Let 99.000. Let the DXY get into this level right here. Pardon the intrusion. Let the DXY what get into what this level right here, and then we can look for buys on the Euro USD. It doesn't matter if the Euro USD is already at the level it was looking to sell off of. It does not matter. What matters is we wait for the DXY. Now, the moment the DXY touches it, we then go to the Euro USD to look for the bounce. You see what I'm saying? So that's the plan. Now I missed the last leg of this structure last week, and it hurts. But we learn and we move forward, because I try my best possible to capitalize on every opportunity, because I am a swing trader and we are all swing traders on here. I suppose it is very difficult to get trades. As a swing trader, you have to wait a week, right? Unlike day traders or scalpers where you can do in minutes, you have to wait a week, right? Waiting is beautiful. I love waiting. It's part of the game, right? It's I love there are three things I love about trading, right? There are three things that make me happy, right? I find joy in, first of all, you know, the anticipation of a trade, waiting for a trade to come into my area of interest and then executing. After a week or two, I find joy in that. Now, number two, I find joy in knowing the reason for my losses. Yes, I find joy in knowing the reasons for my losses. It is very important. I don't mind taking a loss. I don't mind. In fact, I invite it and I will learn off of it. And then the third thing is this: I find joy when I then use what I've learned from my previous mistake to then profit in the next trade. These are the things that give me joy about trading, right? These are the things that give me joy about trading. So I'm anticipating, we're waiting. It will surely come back. It will surely pull back, right? The market will surely pull back. It has to. It has to, right? It has to, right? So we're expecting what? Euro USD, a recap, like we said before, Euro USD, we're expecting a retest into 1.16000. Excuse me. When we get into this level, we'll then, wait for the DXY to get into its own level, and then we sell off, right? We then, come with our counter trend lines, and then wait for a break of structure and then execute. I make sure I get a break of structure and a break of counter trend line before I execute. You may not have to. You may not do that, but I do that because that is what works for me. Trading is personal, right? That's what works for me. So I wait for a counter trend line and I wait for a shift of structure and then I execute. So that's all for this week. That's all for this week. I urge you lot to like, comment, subscribe as well. Leave a comment. Now, there are some of you who would, dislike the videos. I don't mind if you dislike the videos. I do not mind. It does not mean anything to me. But what I need you to do is, if you're going to dislike the video or dislike the analysis or the ideas I'm putting out there, at least leave a comment saying why you do not agree, so I could be straightened out and you could be straightened out as well. I do not mind if you dislike it. I am not bothered. I'm not on here to look for income off of YouTube. I'm here to be there for someone who might need an assistance. So that's why I'm here. So if you're going to dislike my videos, please leave a comment saying what you disagree with. That's all I ask. Have a good week. Ciao, ciao.